A me-session. We all know, unfortunately, what a recession is, but what's a me-session? And it's a term that was brought up or created recently, and it's been floating out there. And really, simply put, a me-session is all about us as individuals. The fact, as I just mentioned in the previous segment, the fact that in Canada, we're not in a recession, right? We don't have two negative quarters of growth, back-to-back quarters of negative GDP or negative growth. That would mean we'd be in a recession. But a me-session means that to all of us, each individually, we do feel that we're in a recession. Inflation, even though it has come down at 2.5%, understand that just means prices are going up by 2.5% this year, on top of the maybe 4 or 5% they went up last year, on top of the 8% inflation rate that we had a couple of years ago. So this is 2.5 on top of last year's rate, on top of the year before's rate, et cetera, et cetera. So it's not that prices are coming down. They're just going up slower, but they're still going up. And we're feeling it. The average person is feeling it. Even though the price of groceries is not going up as much, it's still going higher. Even though price of travel, price of services, price of everything, price of goods in general, it's going up. It's just not going up by as much. So for the average person whose wages aren't meeting the increase that we've seen in inflation over the last few years, it's been difficult. It's been difficult to make ends meet. And we've had to borrow money to, I guess, account for or compensate for our wages not being able to keep up with the rising inflation that we've seen in our country. Our first chart here, debt to disposable income here in Canada. And you can see, I guess, the latest number and then what it was in 2013. For Canada on the far left, you can see that the latest number in and around 180%. So $1.80 for every dollar that we make, we spend $1.80. You can see all the different months. Obviously, Ontario and BC, the two bigger provinces, Quebec, not as bad. But Ontario, a lot more debt being taken on than we saw in 2013. BC, actually, less debt than it was in 2013. But let's take a look at Ontario. Ontario was spending $2 for every dollar that is made. So it is, people are definitely spending beyond their means, and they're having to put things on credit cards. And we are seeing defaults. Defaults are higher. Unfortunately, bankruptcies are up over the last few years. And what does that mean? Well, we're seeing it in bank earnings. Canadian bank earnings, as we just discussed, they're coming out, and let's see what they say about allowance for bad debts. But yet, even though we've seen people continue to spend and rack up credit card debt, this is the productivity. If people are spending money, you'd think people would be more productive, and it's just not happening. And as I said, the amount of immigration that has come into this country, so the amount of people has increased, so therefore the spending has gone up, but the productivity has not. We're nowhere near as productive as other countries around the world. And our next chart here clearly shows that, a drop in Canadian productivity. And you can see how we fare. There's Quebec in light blue up the top, Canada right after. Ontario actually is better than the average, better than Canada, better than the average. But you can see the average of OECD countries is well above where we stand. So productivity is definitely, productivity growth in Canada there's really just no growth in productivity. And this has been one of the comments Bank of Canada has made, and one of the reasons why they've begun cutting interest rates, because they're fearful of our productivity in this country. Next chart that we have here shows Canada or Canadian versus US productivity. So this is comparing us just to the US. And there's obviously a very big gap in real GDP per capita, per person. How much the average person is, how well the average person in the US is doing versus how well the average person in Canada is doing. You can see the Canadian line just kind of tapering off down to the bottom right, whereas the US has been moving nicely higher to the top right from the bottom left. We seem to have kind of peaked out, I guess, in and around just middle of or beginning of 2022, and now we seem to be coming down, and that is a problem. That is a problem. If we're not being productive, we're not growing, we're not creating, this is no good for a country that needs growth, that is looking for growth, that is looking to see a growth number above 2%. And our next chart here, again, shows what I was saying about immigration. You can see on the far right-hand side how many people, how much immigration we've had, people coming to our country, which is great. You know, don't get me wrong. I'm not here to say that we shouldn't let in people to our country. Absolutely, we should. But we need to have better productivity. We can't just rely on new people coming to our country to spend money to help our GDP move higher. We need to grow. We need to expand our businesses. We need to have new businesses pop up. We need to have more business spending. We need people to want to be productive, want to expand. And unfortunately, a lot of individuals feel that the environment here for that, under our current tax system, under our current government, is just not conducive for that. And that's been a big, rallying cry for many individuals here in Canada. We'll see what the federal government can do. But overall, right now, it's just whatever we're doing does not seem to be going the way we want it to go. So what is a Me-Cession? A Me-Cession, very simply put, is just we may not be in a recession here in Canada, but for each individual person, me and you and all of us watching today, a lot of us are feeling that we are in a recession based on our jobs, our wages, and many other things that go into calculating what an actual recession is.